Hello traders, how are you? Vladimir here, and this is the weekly review of the Forex market, and not just Forex market, for the week of 18th of September 2016. Well, let's start with the fact that this week is exactly the week that the market has been waiting for. And this Wednesday, the Federal Reserve will actually reveal and release and show the world their own decisions about the interest rates. Now, that has been the main issue in the market since long period now, especially the last week. If you remember on the previous weekly forecast, I told you guys, don't be surprised at all if this week and the next week to come, which is this week to come, right, would be tricky. Sometimes create fake moves, sometimes zigzags, sometimes fake setups. So it's very, very important to trade safe and don't take some risks that we might regret on later on. So here we go. Wednesday to come. The Federal Reserve will release their decisions according to the latest CPI report. Of course, CPI report in the US. It seems that the ground is ready for a hike, and that's what actually the market is preparing of, right? Take a look on the New Zealand dollar. It's getting ready for all the, according to all the cycles, it's getting ready for all the possibilities. It's actually going to happen. So we have the room to see something like that all the way to the downside. Take a look on the euro dollar, which is struggling to create new highs. Also struggling to break the last lows, right? But technically, according to the monthly cycles, it's probably ready for one more push, final push, maybe to below the parity. It could start and happen. So the Fed actually will make the move, and also the pound. Take a look on that. It's ready for the duplication. I'm talking about this duplication, of course, right? Well, we can see that actually moving it's all the way for further down move. You see that? We had here 36, and this down move was reached within a few candles, which means this duplication, this level of duplication is irrelevant. The next one is right here, so it technically could make the entire move down there. And even if not so, we have this, remember? Oh, sorry, we have this, right, and this. So we can still talk about 123 at least. That's also doable. So it doesn't matter how we turn it around. Also this cycle, of course, the 161.8 is a bit lower. We still have down move to go. So will the Fed make the move? Yes or no? We get the answers on Wednesday. And probably, if the Fed will increase the rates, we will see the dollar getting strong for respected period, very likely. But that could cause some mess on the market, because the stocks will not be as sexy and tempting investment any longer, which means traders might run to Forex again and get out of the stock, maybe to options as well, right? And that could cause some moves on indices. Now, that's going to be a very interesting period for sure, but let's think about what will happen if the Fed will not increase the rates. Just think about it. How big the disappointment of the traders will be there. And they could kill the dollar if that actually happens. They could kill the dollar. Euro dollar can reach to 116, 118 suddenly out of nowhere if that happens. Maybe even 120. Pound can fly to 136 or maybe even 140. Such things are doable. Okay? So technical things are great, of course, but such game changer as this event to come on Wednesday will actually be the real leaders of the moves, will be the main reasons for the moves. And our goal now is to get ready for action, okay, for both directions. So Monday, Tuesday are very likely to be warm-up, which means neither quiet, okay, like a mute film, you can understand nothing, just by some moves, right? Or some zigzags and preparing the ground from important levels. I hope this is going to be the second option, and after that we should have some very interesting moves. So be careful with your trades. That's what I'm saying here. Don't rush, guys. I know how much everyone want to trade right now. Just don't think this is what you really want to do. I mean, you now are one against billion of other traders. Don't try to be smarter. Okay, don't try to be a hero. Wait for your best opportunity. Your best opportunity will come probably after many other traders gave up on some opportunity, and then it will be classical, right? After zigzag, after false breaks, right? Trendline breakouts, when many just run away or get stop losses. It's a great time to jump in the market. So wait for the best opportunities with the best of confirmations. I will try on this video to prepare the ground for these moves and give you some levels. It's gonna be hard this week because we have the challenge of what's to come on Wednesday. So this week I will try to give you both possible scenarios. I want you to understand the action from what levels and what we are looking at and what we expect for in order to take actions. All right, so let's start actually. So let's stick with the pound dollar. This is what we have so far on the chart. Let's talk about this a bit. Technically, this one has a room for lower because of the same levels I showed before. We have this cycle, which takes the 161.8 lower. We have this cycle, which takes the 161.8 also lower. You see, they have some monster area around 118. That's doable. That's very, very, very possible and doable. And we have this one, which could show some duplication, believe it or not, where? On same zone. So everything like 120 and lower is more than doable if the Fed actually increases the rate. Then we are probably for something like that. Where from I believe the bottom will be set and the pound will go all the way back to 140, but that's a different story right now. How do we get ready for these kind of shorts, if that's about to happen? So first of all, we go to daily chart. We see that triangle that we had before becomes irrelevant. So we are in a second scenario, which is, remember what was our second scenario? Just a horizontal range. If we observe the horizontal range, we actually have two things here. Okay, we had this false break, which makes this as a bottom, and we had this false break, which makes this as a top. Two false break in the range, right? Which technically means we could do right now one more false break and a fly, or a break, pull back to retest and continuation, which goes hand by hand if the Fed actually increases the rates. So the way I expect the pound to act would be 1, 2, continuation and breakout by Wednesday, or attempt to reach this bottom, and then we will actually see if we continue straight for further bigger cycle, or are we about to start the reversal all the way up for new highs. So let this one go. Mark this trend line. This is the one that is developing, and if the Fed will not increase the rates, break above that, retest, and look for buys. Now here I'll give you the best tip for buys. We have two ways we would want to trade here. One, fly, 2 waves pullback, and then the break above 2 waves. 2 waves have very, very simple principle. 1, 2, 3, 4. Boom, boom, boom. 3 below 1, 4 below 2. That's all. Okay, many traders tend to complicate that for no reason. That's all I want you to look for. 2 waves, 1 2 3 4, 3 below 1, 4 below 2, classical breakout. That what gives you small risk, monster potential reward. That's exactly what you want to do, because remember, our goal is never be a hero. Our goal is not to be right. We are not analysts, right? We're not analysts. We don't work for some companies that judge us according to our predictions. That's not our goal. Our goal is to make money. We're traders here. Remember that, guys. It's very, very important, because so many traders just think they are bad because they predict bad 1 or 2 or 3 or 5 trades. Who cares? Believe it or not, I have periods when I predict like 5 wrong directions out of 6. Who cares? I care about to be right on the 6th one and make money. That's all I'm asking for, Mr. Market. Who cares? So remember that. And that's what good entry with good risk reward, that's exactly what it gives us. These are the opportunities. So the other scenario is if we break straight down, pulling back to this trend line, and then we are looking to trade the same pattern, 1 2 3 4, and sell. The second way to enter the such opportunities is actually fly, then you have last top, pull back. That's not going to happen quickly. Pull back to 50 or even 61.8 Fibonacci. So let's say you have a move like here, just for example, it starts to make a move, boom, straight move 50, and you jump in as long as your trend line holds and your cycle holds on the direction. So that's basically the two ways we have classical trade opportunities. Okay, so the breakout here, and we neither get 2 waves down and breakout and continuation, small risk, top reward, or break, retrace to 50, and we are in versus the bottom expecting the same stuff. This is more aggressive. This is more conservative. And that's for the pound dollar. Euro dollar also looks monster opportunity, but here what we have, we're still moving in the range, right? This is our range. We're still dancing inside. We are still there. So to go long, we will want the last trend line available, which is in our case here, to be broken. We want to go above that, and same stuff like with the pound dollar. By the way, there is a chance we will start to develop some kind of trend line by Wednesday, and then to be different trend line, right? But currently this is the last trend line we have. Break above it, pull back, same idea, back to 50 or in 2 waves, and we go up, aiming according to weekly cycles, duplication of this. So that means something like 116, 117, or maybe even 118 for 61.8, and full duplication to above 120. That could happen if Fed really disappoints big time. But if Fed makes the move, boy, oh boy, that's what very likely will happen here. This will turn to be, as you can see, according to we have swing highs going low, right? Then we need to start to make swing lows going low. And if we break below this low, right, that's where things start to get interesting. Then we have the last trend line, pull back to it, and we are after sales, expecting the last bottom of the range, which could be like 107, 106. That's where probably hundreds of points going to be generated. New Zealand dollar, another pair under the list. It has all the reasons to start to make move to 0.67 approximately, and also same time, if the Fed disappoints, all the reasons to take us to 0.76, maybe also to like 0.80. That's also doable. So on the daily chart, the 4-hour chart actually, we had 2 waves. By ideal, we should get something like that on the beginning of the week. Then breakout if the Fed increases the rate, or if not, then we are going to probably for something like that, some pattern or some false break here, and then break off the last available trend line, pull back, and aiming the 0.75, 76, and then maybe even 0.80. Keep an eye here. it's going to be interesting. What did I do here now? Hold on. Okay, fixed. Aussie dollar, same story. If you remember a long time ago, like a few weeks ago, I told you I would be very interesting to get Aussie dollar in this kind of correction. Get as low as possible to here, just to look for buys. Why? Because of the monthly cycles it developed, right? But here comes the but. There is a but here. There is a chance that Aussie dollar will now start to develop something like a special cycle, which means one more potential bottom around somewhere here. That could happen. Technically, it has all the reasons to make this already. But that could actually happen if the Fed will make this brutal move. So, same story. How do we trade that? This is what I expect to happen by Wednesday. If it does, if Fed increases the rate, sells. Same principle. Sell, pull back to 50 and sell, or two waves, breakout and sell. Aggressive and conservative approach. That's basically all the difference. Okay? Or if we move in some kind of triangle or one more false break and then the Fed disappoints, break above the last highs or the last trend line available, retrace and buys. You can see, guys, all the same pair, all the pairs give us exactly the same principles. Same setups. False break here by Wednesday could be a monster call if the Fed disappoints. So let's put the levels. We would like to go and sell from one more rally if happens, like around 0.75, 50, 0.76 or so. Then breakouts, as explained, or buy with one more false break or triangle breakouts. Targets 0.84 could be easily the target for the duplication of the wave if we rally the Fed disappoints, and targets for sale would be 0.73, 0.72, and the next one could be also below 0.70. A monster 0.70, maybe even brutally talking about new low, which could be like 0.65 down to 0.60. That's too far for now, but things could get interesting this week, so we should be ready. Let's continue. Dollar CAD, another dollar pair we have on the list so far, holding the possibility to get this, right? But on the same time, holding the resistance and the 200 moving average and the double cycle on the daily chart. Let me show you something interesting here. You can see indicated by this indicator, the cycles indicator, that this what actually would be a potential reversal area. We don't sell blindly, right? But we are looking for setups, and I'll show in a second how to do that. By the way, this cycle indicator would be a gift for the Libra Code traders. Yep, this is the first time I share my cycles indicators, which will help you to identify the best trading points. Anyway, that's, as I said, only for Libra Code. I will explain. I always talk about cycles here on my videos and on the daily videos, so you will even understand that. But if you want to use that, you better be the Forex Libra Code member. So what does it mean to have this kind of cycle there? We have the divergence beautifully set up here, or bit higher, we could get the reversal. We had one false break, we did have second false break, which means, boy oh boy, get ready for sell. That's what it means. Now here's the second false break. Now how we go for anything like that? We have the divergences everywhere. Technically it could be great setup. Don't attack blindly, guys. We need currently break below this low, reversals and sell. Why? We did have to false break, but we still did not gain any momentum by creating lower lows, and we better do that. By the way, that's one of the things we do. in the Forex Libra Code once again. This could be another scenario. One more rally, one more false break above, break below. Then we'll be looking for the last low to be created and retraces and sell. If the Fed disappoints, we are going for the next cycle, which would take us to 124 or even 118 for dollar CAD. If the Fed does not disappoint, we are going to 136, very likely, maybe even bigger, before we talk about any possible reversals. So keep an eye, guys. That will be interesting. Dollar yen, another pair that is looking for something. We have been long on this during last week on the signals. We got one take profit, the next one was closed. I do believe that we are going to play inside this kind of thing until Wednesday. Then breakouts, retraces, and we sell up. We buy up to 106, 108, maybe even higher. Disappointment, and we might get the drop down final low according to weekly cycle, and the continuing divergence developing around 95 or so. Sorry, 97, 95 or so. This is the zone. So get ready for interesting thing. Now crosses. Euro pound. You remember the scenario from last week? So far it's doing exactly that. We have a potential head and shoulders, or we have a potential rally towards one more fake breakout around 087, 088. Currently, we have the rallies, we develop potential divergence. We still want to see the trend line broken and lower lows to get created. So we will want to get this trend line breaking and this low broken, then pull back, and we are after sell according to the head and shoulders, aiming 081.40. If it keeps rallying slowly, 087 up to 088 starts to be our sell zone. The ideal setup would be if we can get a false break above this high, then retrace down again, okay, and then on lower time frames we would be looking for this kind of setups. Boom, boom, pull back, breakouts, and sells. Again, aiming all the way down in this range, 083 and 081.40. It's going to be an ultra interesting period, so keep an eye, guys. And according to the cycles, believe it or not, guess where is our 161.8? Exactly on the same zone we just talked about. And guess where is this cycle levels? Same place. See that? That's how interesting it all becomes. So keep an eye if we do get this scenario, or if we get a breakout, then we break below the last low, pull back, and we sell according to the head and shoulders. Amazing pair opportunity. Aussie yen, so far so good, holding yet this range. Technically could still do this kind of movement. It has let's remove that. It has all the reason for that. We are dancing on the 61.8, so it could still spike lower before the breakout or even duplication. That's doable, but we are after only longs. On the 4-hour chart, we create some kind of a range here, which of course I would be very, very, very happy to get out of. So we either do this and then fly, okay, with the break above the last trend line, or we break above the last range up, pull back and fly. We want to go longs and longs only, aiming 80.81, and then probably according to the cycle from the weekly chart all the way to at least 38. That's 84, and then 87. I know it's early right now. After the Fed, very likely things are about to start to get interesting, so keep an eye here. It is going to be very interesting opportunity. Next one on the list is going to be where is this one disappeared? Euro Aussie, which also, where is it? Here we go. Which also started to make the move. Now I want to remind you, according to the cycles we had here, there are all the reasons to expect one more low. If the Fed will disappoint, that's actually going to happen. If the Aussie flies, that will probably happen. Now, we on this double cycle, we had already classical movement down here, and I believe it's going to do some play here. We have one false break, two false break. I believe we are going to have another one. So 148.50 and lower, I believe, will turn to be a potential buy opportunity. Just following this. 1, 2, 3. Okay, special cycle with divergence. So I would like to see here false break or even 2 false break. Momentumal break by creating higher highs, pullback, breakouts, and buys. Buys to the middle of it. And then, of course, waiting for the Fed to come and tell us what's next. If the Fed disappoints, Australian dollar should gain the strength that could be enough for Euro Aussie to make one more move down, maybe for new lows. And then we would be looking to resell from here. If the Fed actually increases the rates, which I believe then could cause the Aussie dollar to continue the movement, and then there is a pretty serious chance that it's going to make this move next. Okay, so then there is a big chance we are going to move in this kind of idea. So it's getting interesting once again. Keep an eye here. Also monster opportunity. Aussie Kiwi, our favorite. One more low to below 102, 101. Still possible, still doable. But also what could happen is the break above this high. If we break above 103.15, then look for retraces down and buys as long as the last bottom holds. If it doesn't break and we have new lows, then just look for new bottom with false breaks on daily chart and then buy. So this is the place, right? Buy with this kind of idea. Or new low to below 102, 101, and then we are after the new buys there. By the way, it's not only about the Fed this week. We also have cash rate in New Zealand, which will contribute to all these kind of scenarios. So we have to keep an eye there. And one of my favorites is going to be the New Zealandian Kiwi, because this pair could rally all the way to 0.98 or even parity. Take a look on this cycle. Okay, you see what it does? This was a triple. So technically it has all the reason for one more low, or just to make a false breaks here on this area. We do have the reasons for divergence, right? On a weekly cycle, this is the duplication, and that's why again it starts to be a monster. But, and here comes the but, on daily we did have 1, 2 false breaks forming and completing right now. So by ideal, we want to start looking for sells. The ideal setup is going to be, of course, break below this low and the trend line, and then pullbacks and sells. That's good. That's going to be monster. But on the 1 hour chart, for very aggressive approach, we already had the break of last low. We already have convergence and the break of the last trend line. So there are all the reasons to try an aggressive sell opportunity. For that to happen, we would like to see that pulling back into waves and then breaking below that. Then we will have minimum risk, maximum potential profit. If that about to fail and we still have new highs, 0.98 zone approximately, is going to be our next area where we would like to look for sales. Cat franc, I still prefer, honestly, to see one more low around 0.73, 0.72. If we have it, that's going to be monster buy opportunity. If we don't, I would like to get this. We did have one false break. I would like to get this kind of movement and then look for buys with break above triangle or a range to be created. I still want to remind you, according to the monthly cycle, I'm looking for the buys for long term, aiming 0.84, 0.85. There are all the reasons for longs here. If we can get lucky and get one more low around 0.73 or 72-ish, as I always say, boy oh boy, that's going to be brutal. Brutal. Enough of Forex. Take a look what's going on the commodities. This is gold, which could complete for us this kind of movement, which could turn to be a monster buy opportunity. Look on the cash flow levels and look where we have that. Okay, slightly below than 1300s. We have it 1290, 1280 monster zones where we could get this triple cycle completed and flies for buys. But here comes the but. We could still have two false breaks, not yet completed, not yet has any reasons for a buy, but we could start to get this kind of scenario, then rallying above the last high, pull back and fly for new highs according to weekly cycles to 1430-ish. Silver also by ideal should complete this move down to 1817. This is the area, this is the trend line, which where from we would be looking for some monster buys as investments. Keep an eye here, guys, and by alternative, if that's not about to happen, we would want to see the reversal here, break above the last high, pullbacks and buys for new highs according to the weekly cycles. 25, 28 should be the targets. Keep an eye, action guaranteed there, and that's what I want you to be ready for. And the indices, before the indices, oil also about to make the interesting completion here. It's about to complete this. Okay, already shows the signs. Same story with the Fed. We want to see false break, higher highs, pullbacks and flies, or lower lows with false breaks, and then we go for buys. Or if we just keep going through this level, we are after deep hair movement, something like that. We still have the duplication area lower, like 37, which is also doable scenario. And then after buying, we keep a close eye here for these two scenarios, as action also guaranteed there. And for indices, there are new contracts right now. Also, they got ready here for everything. We have all the reasons technically for 2300s or 2400s for S&P, new highs before the crash to come later on. And also, we have all the reasons for a false break to be completed on a monthly chart. And if it does, that's the sign for a bearish crash to come. So this is probably going to be decided this week. On the short term, let this craziness over. We are now dancing in a triangle, which will give us the opportunity to trade right then. Neither breakout and new highs or down and crash for serious lows. That would be all for today, friends. I know that's a lot, but I just wanted to give you classical way of the scenarios. I know it's both scenarios, but in this kind of week, that's the setups we have to get ready for. And as I said, Monday to Tuesday, and actually most of Wednesday, would be warm up probably, which could mean two things: slow moves, ugly moves, or warm up by zigzags and preparing the levels we have been talking about for action to come after that. Keep an eye on these opportunities, guys. You have all the setups ready for you right now. Don't try to be heroes. Save your money. Action would be there. Be patient. That's all I am asking for. And great news. Last week, I had the first webinar for the Forex Libra Code journey. That was amazing, which made me extremely proud, to be honest, as I saw some talented people there and a lot of ambition and hunger for success. That's exactly what I ask and expect from my students. If you answer on these requirements and you want this journey to be successful for you as well, it's time to jump on before we start to move on very serious. So don't waste your time. If you want to be part, that's exactly time to take action. So I expect to see you inside and show you why exactly that was probably the best thing that Forex industry knew by far, so far. And here is to show you that account, small account, 5,000, just started for the Forex Libra Code journey purposes. Trading ultra conservative here, ultra conservative, just to show you can make a lot of money even with this kind of trading. It's just a week. but we are almost 10% up, something like 9% here to be actually correct. It doesn't show the percentage growth. So that's the journey we started. One of my followers told me, Vlad, you sound so excited about Libra, probably most excited than ever. And that's true. And on the first webinar, I actually shared my story here. I'm looking for traders now. Not just for testimonials for my good quality of services or mentoring. No, I'm looking for traders to help this industry. The industry is hungry for successful people, for hedge funds, for managed accounts, for services, for help others. This industry requires not just good mentors right now. This industry requires now great traders. And that's what I am about to build here. Great traders. And the best ones are going with me directly to the industry, real industry, on any way they will decide to take part of. It's not a gimmick. Not at all. I have already enough students that answers on my successful stories, and they already work in the industry. A lot of guys that have been working as employees and left their jobs and do that full time or partial time along with other things. So that's my journey here. So yeah, I am probably the most excited ever here because I know what I'm about to deliver. I know what people are doing and what people are able to do with the Forex Libra Code. I know it's not cheap. I know. But what you get here and what I dedicate for myself here would be the cheapest price you paid for anything ever. And you will see that on a very, very short time. That I can promise. You will get the best of myself that probably ever was given in any course. So I expect to see you there only and only if you are ready to work hard as I expect, ask for, and require. Otherwise, there are no success stories. It's not only about the system, it's also about you as a person. Be ready to be successful. That's all. So thank you very much for your time watching this video, and I'll see you in the next weekly forecast with updates of what happened after the Fed. So I wish you a wonderful week, guys. Once again, thanks a lot for your time. Please, if you enjoy the video, I always enjoy to create it for you. If you enjoyed the video, share your feedback, your comment, click the like button, and please feel free to share with everyone who you believe could have any kind of benefit by watching that. My idea here is simple: spread the word for the community and to help people to become successful. That's all I'm asking for. Thanks for your time, great trading, wonderful weekend and week to come. Yours, Vladimir Ribakov.